The thing that changed the trajectory of my trading career, I think it's maybe a little premature to call it a career, but I have been profitable since 2021. But I was going from not from negative to break even, then I was trickling in some money, and now I have the ability to do this on a full-time basis. And I would not have gotten there if I had a mentor at the time that said to me, "You need to finish your trading plan." And I was like, "Yep, sure." It took me another year from when he told me that. And then I finally dug in because think about this, the market is something that's out of control, right? There's not much that we can do there's absolutely nothing we can do to control it. It moves the way it wants to. Of course, as you build your experience and build your eye, you'll spot the tells of when something's going up, about to go down, or staying in a range. Like, you'll recognize all of this. But with a space that is so uncontrollable, what you want to do is do as much as possible to help yourself by putting things into place. So when I finally dug down and was like, okay, I'm going to put this plan together for myself, it took me about a year to complete it. And it wasn't because, it's because as we go through it, you'll see like there's a lot that goes into it, and yours does not have to be long as mine at all. But the type of trading that I do, and then for me, I spend a lot of time like on the psychological part of myself and how I handle triggers and how I manage my emotions and activation. So you'll see a lot of that in there as well. But just to tell you that what I've pulled from my trading plan, I think that these 6 things are super important. What you do for yours, it doesn't matter as long as you have a plan, and that plan has clear goals and it serves as your guide to get you to where you want to be. So what I'm doing here with the first one is setting your plan, purpose, and objectives. So you want to make sure that you have goals for yourself, whether they have to do with a certain financial metric you're trying to hit, or just, I just want to break even this year, or I want to have finished my trading plan. I want to have set up a strategy my own. Doesn't matter what the goal is, it just has to be defined, and you have to be able to track progress towards your goal. I always start with an objective. So part of my background, I was in operations for a long time. So I was writing training plans, SOPs, and just building systems for companies. So that's where a bit of that skill set played very well once I actually sat down to do this. And the first thing, in my opinion, is that you want to have your North Star through an objective. So for example, my plan purpose is this plan, and these rules are designed to remove as much decision making as possible. The fewer decisions I have to make under pressure, the lower the probability that emotion overrides structure. These rules exist to protect capital, reduce impulsive behavior, and compound consistency toward my objective of averaging 250K per year in the market. Then I go in and break down, I set up different key results that I want to realize. And for example, my Q1 objective is so simple, and I didn't put any specific monetary goals. Even if you see it there, it says lose the weight, start exercising. So I'm coming off a period of tilt. So at the end of last year, I had a very hard time recalibrating, and that uh, that period, I was just coming out of it earlier this year. So for me, I was not in a place to set very heavy goals. So what I wanted to do is just revise my plan, and then any revisions I made, know those revisions without hesitation, and then end Q1 in green in all accounts. That means even if it's just $1 over, I don't care. uh, and I kept it pretty light because of where I'm at. And then as I go and evaluate my first quarter, which is going to be ending soon, I'll see if I need to extend those goals or if I can pick up the pace, add a little pressure to myself, and put some monetary goals in there, right? So that's an idea of how I create my objectives. Then number 2, the risk framework. So this is about capital preservation. The worst thing that we can do is lose so much money that it's very hard to bounce back mentally, emotionally, or have lost so much money right before a period that is very clear and defined, and where that money is easy, the profits are easy to make, right? So risk is defined by many ways. Like there can be for example, for me, when I'm having a very strong streak, then after a certain threshold, I will only trade one setup at a time, like one name at a time. Because what I've done in the past is when I'm on a roll, I keep adding and adding, and then all of a sudden my exposure is out of control. I'm not even paying attention to it because I've got winners. But as you know, in the market, there's a certain point where that move is going to stop or turn around, and it can turn around harshly. And I've gotten caught up in that. So you want to define how many open trades or the amount of money that you will have on at one time. You want to define what you're going to do if you've found yourself in a losing streak or a winning streak, or if you've hit a certain milestone, which is what happened to me last year. I hit one of my all-time highs and I was like, this is amazing. And I quickly gave a good chunk of that away. And I didn't really understand why, but it was that the expansion of my account grew faster than what I was ready for internally, and I didn't know how to handle it. And I was trading just the same instead of, pulling some of that off the table and continuing to focus on my the same trade size, not going in heavier, and definitely not trying to make it up. So, your core trade models. So this is your setups, right? Your playbooks. And your playbooks can be from someone else. It doesn't matter where you start, but you want to make sure that if you're trading like a system that uses, for example, EMAs, like once a price closes above, let's say the 10 EMA, that's I'm buying, and then I'm going to stay in it until price closes below it, right? For example, if you're using someone else's strategy, it's fine, but just make sure you make it your own. You want to define what you want to see before you start trading, because a lot of strategies, they don't include this. They're just setups. But the reason is because there's so much nuance in the market that it is hard to teach. It is I think there's people out there that do a really good job of teaching it, but you have to understand why this setup works in one environment and not the other. And all of that you want to define. So, for example, like you want to describe what conditions have to be there before the trade is even on your mind. So right now it is March 14th, and we're in a decline. And if you are used to only trading the upside, then, and you have not defined how to trade in a declining market, you're going to get chopped up. So you want to make sure that you're describing the environments, then what specific exact thing you want to see to take the trade. For example, for me, I identify a shelf, like I identify a level where price is holding. So the price has declined, whether it is a pullback or a retest to a certain area, and then the price holds at a certain area. And I'm just talking to the upside for this example. So price is holding at an area, and once I see that shelf and that little area of retest, and then what I'll do is I will get in once I've seen the price retest and hold that area for 2 or 3 touch points, right? By the second or third touch point, I'm like, okay, it's holding, I'm in, right? And then you got to define where you're taking your money off of the table and where exactly your thesis is wrong. So for me, it's very simple because I've identified that shelf. And so that becomes my invalidation area. So wherever that consolidation is happening, and I'm assuming that this consolidation is holding and I want the trade to go to the upside, then whatever is holding here is my invalidation. If it breaks below that, then I get out. Now, how long is it? 1 candle, 2 candle, 3 candles? That really depends on you, your experience, what you're able to sustain even emotionally. For me, most of the time, I give things time to play out, a few hours, or maybe, and once they've hit my invalidation area, I'll give them up to a few hours. But there is times where I see everything just pivoting and I do take it off the table, right? But all of that is clearly defined. And that's what you want to do when you're creating your own playbook. Doesn't matter where the playbook was initiated from, but it does matter that you make it your own. All right, so moving into triggers and self-management. Okay, this one is my favorite one. Have y'all heard before that we kind of stick into, like, we stay with things, like we want to work on the things that we're good at, right? Going deep and knowing like what causes what triggers me, what gets my nervous system riled up. That's my bread and butter. I can talk about that all day, but I actually had to put a stop to this. So what I went ahead and did is create a little bit of a structure around triggers and self-management. I identified, first of all, I gave myself a timer. So if I wanted to go down a rabbit hole, I'm allowed for 25 minutes. In that 25 minutes, I need to identify what the trigger is, what the shift is, like what happens when I'm triggered, and how I interrupt it, how I contain it, right? So I will share an example here. Okay, so as you can see that I have everything here to support my goal of being a consistent, regulated trader. And what I have as one of my examples is checking P&L. Now, y'all know you just don't check P&L. That is one of the simplest ways to win, but we know we do it sometimes, right? So I first put down my trigger, which is it's checking P&L, but there are some things that come before that. But let's start here. What happens then? My ability to stay in the trade is no longer defined by my rules. Now it's about my P&L. So the first thing that happens is I'll exit early. Then the move goes and then I want to get back in and then I go into trade cycling. The secondary consequence is even worse. I really just abandon my plan and my rules completely and I start over trading. So the trigger is checking the P&L, but I'm going to go down a little bit further here. And this is where I have identified that the P&L is why I check it, right? So whether a move is invalidated or not, if there is a lot of volatility, I mean, it's not just me, right? Is it just me? If there's a lot of volatility, I'm like, oh my gosh, how much am I losing? Like, what is going on? And I go and check it out. Also, just emotional activation from external things, tension in my any relationship, friendships, partner. I'm tired from whatever it could be, and maybe even a series of losses. So now I'm a little bit more jumpy. So I've got here, I'm activated, my tolerance is lower. And so then I'm like, okay, I need to check what's going on. Also, if you have too many allowances in your plan and too much discretion, sometimes that will lead to not trusting your plan. So because I do have discretion in my plan, sometimes I abuse it, and instead of just waiting a few candles, I want to check P&L to help me make my decision. And then the other thing is like the trade has moved well, but I'm not on my target, so I'm like, let me see how much money I have. So this is what I'm talking about when you're kind of writing out what goes on inside of you. And for me, it's very important because there are a lot of things that activate my nervous system when I'm trading, and I want to be able to catch it quicker. So I've identified a lot of things here. I've got, sequencing issue, like me getting in early. I talk about when I have, and a lot of them overlap. So thesis substitution triggered by activation residue. And what that means is that I have an idea and it's not working yet. And I'm jumpy. So, and the residue comes from either a loss or something I got out early, and so now I'm in the trade a little bit later. So it's harder for me to tolerate any moves back and forth. Ambiguity, so a lot of volatility, not sure what's going on, and I don't let things play out. Trading expansion candles, and as you can see in my title, I say don't do it. So I just write to myself like I am counseling myself and how I would anyone I'm mentoring. And, I just have gone down so many rabbit holes. But what I did do is create a little bit of structure around that so that it's actually usable and you actually have an idea of like when you're getting triggered, what you need to do, how to interrupt it. So, number 5. So, number 5 is the market and technical framework, which is something that you need to know. If you are a price action trader, you need to understand where the market is and what stage, the price cycles, all of the, like where are you at in the price cycles. You need to understand what happens with like gaps and failed breakouts, what a continuation pattern looks like. So what you'll see in my technical notes, this is where I describe market behavior, structure, behavior, quality, condition. We've had a lot of chop, so that condition is very difficult to trade in, and I write a bit on each. So it's just pretty much like I'm creating my own manual, right? Because there's so much information. There's so much information that goes into your trade. Like for me to hit enter, pretty much like all of this pages and pages of stuff, right, has to come together. And it's not just the hit enter, it's the middle part is probably, the middle, not probably, is the hardest part of the trade. So I've got a lot of things that I need to be very studied on. I need to know this at the drop of a dime. I cannot be sifting through papers when the market is alive. So I start with, in my technical notes, I start with difficult environments. Then you'll see that I've got a bunch of different things here that I go through the market cycles and stages. I also have a section on gaps and types of gaps, like a gap and retest, gap and go, gap reversals, and then examples. So a lot of examples everywhere. And this is what you want to do for yourself, because to really master the skill of this type of trading, you have to understand how the market moves, and when not just how the market moves, but how to position yourself and get ready for the bigger moves, or bigger or not. Like we can't predict how long something or far something will go, but there are a lot of tells, and to get good at reading the charts, you have to understand stages, cycles, different environments, different quality of price action. And this will help you a whole lot. So, and it's helped me. I still consider myself a student of the market. I feel like I have at least 10 more years to go in terms of like really getting this down, because there's so much nuance, but you won't really get that into your head until you take the time to really study, pull screenshots, compare different environments and everything. So, and then the last one here is your review and governance. So this is how you measure yourself and see how on track or off track you are. I, do my end of day wrap up, but then I do a weekly review where I notate like what went well and what went poorly. And then I set monthly goals of, so let me see, because I've got, so they're very, very simple. I'm looking over here because I have a whiteboard here. January, stay in position. So when I was describing to you about like how jumpy I had been after my season of tilt last year. So January, my only goal was stay in position. Then February, I have follow your rules. Obviously, these are high level, like this is a high level thing. Follow your rules is not, we all want to follow our rules. But when, in my notes, what that was, as I described my February goal, was I had went back and revised a few rules, because I had a really good strategy last year, and then when I went through tilt, I started changing things because I didn't have a grasp on anything. I felt like I wasn't able to get back to how I trade. So in feeling like I had lost my edge, I was like, okay, let me tweak some things. That was not the case. So learn that lesson from me. Like, do not change your rules when you're having a period of tilt or just a bad streak, right? So I went and consulted my trading plan from last year and revised that. So follow your rules was just getting back into the swing of like how I used to trade. So then my goal for this month is stay present with current price action. So y'all know the market has been very choppy. Even though, if you started at the top of this decline, let's see. We've got that first push down mid-February, but then we had a pop up and then created a lower high at the end of February. So if you were there from the end of February down to, let's say, yesterday, great, right? But if you're trading a little bit of shorter windows, you're seeing a lot of like buyers stepping in and then huge sell-offs or gap downs. And this kind of short-term, quick movement, I noticed that even though my overall view was bearish, it didn't really help me with my week-to-week trading. So staying present has been my overall monthly goal. And then quarterly, I shared that with you earlier. But yes, this is the trading plan guide. This is what the majority, the main pieces of my own personal trading plan include. And it's pretty much getting you from, you've got a goal you want to reach at the end of the year. And maybe if that's a little bit too far for you, you can set a 90-day goal or a 6-month goal, right? Just do what works for you. That's the main thing I always share with everyone is this is what's helped me. This is what helped me get my first 100K. This is what's helped me become a full-time trader. But your plan and my plan, if you're more mechanical than me, you might not even have half of the things that I have in here. You may just have something that's very numerical and numbers based. For me, I write a lot. I need to go through my whole inner workings and make sure that I can manage the things that come up that keep me away from consistently following my plan. So that's what I have for you. I've got the link down in the description if you want to download it. It is totally free. And yeah, if you've got any questions, just drop them in the comments. Okay, bye.